SoFi reports fourth quarter earnings Monday morning, the 27th, and the stock is about to have an interesting move. Earnings is going to drive the stock to a new level, and in this video, I'm going to explain why I'm buying this stock hand over fist, bicep over tricep. All right, so the stock is up 120% in the last 12 months, and I expect the stock to continue the rise. And I respect your time, so let me go over the three high-level overview or the summary. So if you don't have time, you don't have to listen to the whole video. Number one, diversified revenue streams and growth in non-lending segments are a big major contributor to SoFi's current and future revenues that are increasingly growing and dropping down to its bottom line profitability. That's going to be a really big deal. I'm going to go into a lot of detail about that. Number two, kind of goes along with number one, which is the improving profitability in the lending business itself and how that business is recovering and why the stock is going to soar based on this profitability. So it's a combination of one and two. Now, number three is I'm bullish on the anticipated earnings beats in the full year profitability outlook. And as you can see on my screen, I have purchased a SoFi Leap option. I have done this in my Discord community. Now, obviously, it's a little late to do this because Monday morning you're not going to get a whole lot of time, so we have already got into this. So if you do want all my up-to-date plays, you can visit the first link in the description. I post some of my stuff on YouTube, but I post everything in my private Discord community as I do everything live. This position that I did right here is a poor man's covered call. I'll explain it to you real briefly, and then I'll go over SoFi and what I think is going to happen for earnings. So this is a position right here where I purchased a $18 call option. This call option expires in September. I bought 20 contracts, and then I sold a 21 covered call. This is essentially a covered leap option, okay, or a poor man's covered call. This poor man's covered call sells this 21 call option for a shorter date like the February date. And this long call option for September functions essentially similar to owning shares. So I'm up $184 on this position right now. I do have a lot of SoFi shares already. So this is a relatively small position where I put in $7,000. All right, now let's get into specifics of what I see with the SoFi business, because as an investor, you need to understand there's obviously a lot of videos out there on YouTube talking about SoFi, but I've condensed it into a short little summary here of the three most important things. I used to work for Goldman Sachs. I've done this for a long time. I was a financial analyst. I was a quant analyst. I want to summarize this for you. In my opinion, I'm just a guy on the internet, not a financial advisor or anything like that, but I've had tremendous results over the past 11 years now. Oh, got some white hairs. All right, so let's go over the first part, which is diversified revenue streams and growth in non-lending segments. I'll be looking at my notes right here. So if you don't see my eyes looking at the camera, I'm looking at my notes. So SoFi's strategy of creating a financial services productivity loop is paying off. By cross-selling and upselling users across its ecosystem, SoFi is rapidly increasing its revenue from non-lending segments. So I told you guys, this is really important because they have a lending business, but that's not really enticing investors enough to invest in them. We're looking at the non-lending business, and I spent a lot of time on this, and I realized that in Q3 2024, revenue from non-lending segment actually grew by 64% year over year, contributing to nearly half of the total revenue. So it's no joke at all for SoFi because they're getting half of their revenue from non-lending, and that part of the business is growing faster than their lending business. So this company is transforming into something different than what most investors think, which makes it a huge opportunity and a misinterpretation opportunity. So there's a lot of investors and a lot of companies, right, where the opportunity is a misbalance from the investor's perspective, right? So a lot of people thought Tesla was a car company. Turns out that Tesla's a data AI company and software company. And that's why the stock rose a lot. It's because in the early days, people thought it was a car company. Well, the same thing can happen with SoFi. I see a lot of parallels with SoFi and Tesla right now. So the shift that they're having in their non-lending business, the shift diversifies SoFi's income sources, reducing reliance on more cyclical lending business and paving the way for sustained growth, which is absolutely true. You need diversified revenues. So the diversification strategy mirrors successful models like Amazon Web Services within Amazon. So obviously, I do have some Amazon stock as well. It's not the sexiest stock to cover on YouTube, but there's also some parallels there because Amazon Web Services is very, very massive business. So let me break it down so you aren't holding a stock that you don't understand. Again, this video is about helping you understand SoFi and where I see it in the future and why this is honestly like a really smart investment that you can make. So I hope your attention span's long enough. If it is, you're gonna get some big results. So let's talk about the secret strategy that SoFi has. This is like a secret basically. They're attracting users with entry products. I'm gonna give you a few examples that's gonna blow your mind. SoFi offers enticing entry level products such as high yield savings accounts, personal loans, or student loan refinancing. These products are designed to draw in new customers with competitive rates and features. This is genius. This is super genius because an entry level product is how you make profit on the back end. This is absolutely genius, and SoFi is crushing it. And specifically, there's many smart businesses that have the same business model. You can see it across the whole board. Even free webinars that YouTubers run is not really free. Obviously, nothing is free. So there's obviously a back sell, or on a webinar, there's always like a sales method, an upsell to make profit on the back end. You also see this with software services with free trials, but then they always get you with a paid plan, right? A monthly paid plan. That's across the whole board. Software as a service does that. They have a free trial or a 30-day trial. That's usually in the software space, okay? Now you'll also see this with the gym space, right? You go to the gym, they say, hey, the membership's $20, but hold on, we'll give you an assessment with the personal trainer. We'll see where your health's at. Well, at the end of the assessment, they're always like, well, we got six packages. I've got a package of 6 training sessions for, $600, right? So they're trying to make money on the back end. And that's a very common business model. And 100% SoFi is doing it correctly with the same business model. So they get you in for something cheap, right? Student loan refinancing, personal loans, high yield savings accounts. But then once you're in their ecosystem, they're going for back end upsells. So SoFi's customers are engaged with this platform at a high rate because it simplifies financial management. And then this deep engagement, which is really important. Again, deep engagement just means you're going to the gym a lot. You go to the same coffee shop a lot. You have continuity in a business, right? So you're a loyal customer, right? So this is a deep engagement strategy. And this deep engagement increases the likelihood that a user will adopt multiple products, creating a flywheel effect where each product feeds into the next product. That is genius, okay? So this is a trust and relationship building at its finest. Humans buy on trust, and that's why good products are important. SoFi has positioned Galileo as the Amazon Web Services of financial services. So by having trust and engagement, they're able to promote, cross-sell, upsell, and get the customer into the ecosystem to have more products, which I totally understand. That's why I'm not even getting off Robinhood, because I've been in it, and using the platform for so long that I can't even get off of it, right? Because I'm too comfortable with it and it's too simple. And you guys see that I have a $4 million account in Robinhood. So the infrastructure or the ease of use is really important as well. And having a fantastic product is what SoFi has. So, providing infrastructure to other players is what they're doing as well in the industry, which is fueling their growth, like Amazon Web Services. This is the most powerful secret and the most powerful part of SoFi, because Amazon's AWS is a prime example of how a diversified business segment can transform a company completely into a whole new business model. So AWS started as a side business to support Amazon's e-commerce operations, but it became a major driver by offering infrastructure as a service. Similarly, SoFi's Galileo platform is growing into a key component of its revenue mix, acting as a backbone for fintech companies in generating recurring revenue. So having recurring revenue, you guys already know, is extremely important. All software businesses have a higher multiple because they have consistent cash flow. It's much better to have a customer pay $100 a month than $1,200 yearly, okay? The more often a customer pays and the less churn rate and less drop off there is, the higher the value. In fact, that's why software companies are so valuable. Imagine, look at Adobe as a good example. If a company is making, $1 million per year and the churn rate is 10%, well, guess what? Well, the value of that company is going to be well over $10 million. Just simply in a 10-year period, it's going to produce $10 million. That's only factoring in that they're making $1 million. The churn rate's 0.1 or 10%. It's 1 divided by 0.1, which is 10. Okay, so you get 10. And that's not even factoring in the growth rate or anything like that. So that's why there's many software companies that can trade 30, 40, 50 times earnings. You see that with the with NVIDIA. You can also see that with Palantir, right? So let's talk about the long-term competitive advantages of SoFi, as we talked about this huge innovation in their business model and their non-lending segment, okay? Let's talk about the competitive advantage that SoFi has. So SoFi's ecosystem creates customer loyalty and high switching cost, making it difficult for competitors to win over its users. The more products a customer adopts, the more entrenched they become in the SoFi ecosystem. So it's like quicksand, guys. You get in, you know the quicksand, then you can't get out. It's like you got married. It's gonna be a little difficult in America. You got married, right? You're a rich man, whatever. You get what I'm saying, right? You're entrenched. You got a whole situation. So this is really important because the stickiness of a business creates low churn. And I just explained to you, revenue divided by churn is one of the big value metrics that investors and basic finance principle, right? So this is the same psychology that Palantir uses. Once you're in with Palantir and you spent $100 million, okay, Palantir does it on a big scale. Palantir, gets government contracts, whereas SoFi is B2C and does individual customers. But here's the good news. Palantir does it with a huge government, but SoFi has the raw volume, right? They have volume. So they have a lot of customers. And once they get in customers based off of big data, machine learning, AI, they can use data to make good decisions to see what hooks in the customer for the longest amount of time. So obviously Palantir does this, and it's crazy. Once you get in a customer for Palantir, the switching costs are extremely expensive. It's like a crazy 18-year-old boy that's in high school, gets his, girlfriend pregnant by accident. That's some high switch costs right there, okay? So that's kind of how it is, all right? That's obviously like a little not so funny, maybe extreme example, but you get what I'm saying? And these companies, they're making money at all costs, at all costs. They get in there, and they're trying to lock in the customer, all right? So that's the competitive advantage of SoFi. Now, improving the profitability and lending business is a third thing that I wanted to cover. And this reason is also just as important as the non-lending segment. All right, so SoFi's financial performance continues to improve with all segments showing growth in Q3 2024. The financial services segment alone saw a profit skyrocket from 3.3 million in Q3 2023 to 100 million. 100 million. 100 freaking million. I'm pumped up because that's obviously going to be something that's going to scale. And the profitability went from 3 to 100. So when you guys talk about, oh, the PE is high, the PE is high. Well, the earnings went from 3 to 100. They multiplied by 33 times. So if a company has 3,300 PE and it multiplied by 33 times, now it's going to be a 100 PE. So you went from 3,300, where people are like, it's 3,300. How do you invest in that? Well, it's because the earnings can drastically change. It's not Coca-Cola where the earnings go up by 3% a year. A business like SoFi or Palantir, especially once they became profitable, they just became profitable, just like Amazon did, right? If here's the neutral line and just became profitable, it's about to skyrocket. It's about to go to a different level. So 3 to 100 mil, there you go. There you go. That's an insane move. So I also want to point out additionally that the Federal Reserve's lowering benchmark interest rates really help out SoFi because SoFi's lending segment is recovering faster than expected, and they're going to get more business. It's easier for them to offer higher interest rates when the interest rate environment goes down. But even if that doesn't change much, it's easier for SoFi to compete and offer high yield savings accounts that beat competitors if they have a stickier product with more back-end revenue. That's what I'm talking about. It's important to have back-end revenue. Otherwise, you can't have a front-end product that is competitive because your back-end is trash, which is not the case for SoFi. So management projects further growth in lending revenue for the full year, alleviating concerns about defaults and origination slowdowns. Now, let's talk about the actual adoption of the products. All right, you can tell I did a lot of research in this video. If you appreciate that, subscribe. I will have more updates on stocks and options, specifically on SoFi. So higher product adoption. SoFi's ability to cross-sell and upsell customers across its ecosystem is driving more revenue per user. In Q3 2024, revenue per product rose to $81 compared to $53 the year before. That's per customer, guys. Per customer. You got a million customers, 53 now went to 81. So you went from 53 mil to 81 mil as an example. So the revenue that they're creating will drop down to the bottom line. Revenue does equal bottom down. Revenue does equal bottom line profits. It's going to drop down, and those bottom line profits are going to make investors go crazy. Investors are going to say, wow, we're making a lot of earnings. So that's going to be really powerful. And products like credit cards and investment accounts really do require minimum costs as adoption grows, allowing SoFi to scale profits quickly. So getting another credit card, it's not really expensive for the company. Jumping on another product costs nothing. So it's pure profit. So the more they can convert on the back end, the more money that they make. So it's as simple as that. So as non-lending services grow, their contribution to gross profits increases, enhancing overall profitability. So it's just the flywheel effect, like I mentioned already before. And then the margin expansion is one of the most important things that I'm looking out for. And actually, one of the ways I've been extremely successful as an investor, I've been extremely successful on Walmart, on Target, on Tesla, on Nvidia, and other software companies. It's because I look out for margin expansion. Margin expansion is essentially like, say you got a pizza shop, right? So say your pizza shop makes $1 million in sales a month, all right, which is it's a lot, right? Let's say you have a whole pizza restaurant in that case, a big one too, because the cheesecake factories make $10 million a year. So whatever. Let's say you have a really popular pizza shop, but let's say it's popular because this is the trouble that we get into America as businesses, most of them in the food business. But let's say that your costs are 90%. So you got staff, you got the ingredient costs, and let's say a premium ingredient. So the reason why your pizza shop's successful is because you get the premium ingredients from Italy coming into your pizza shop. That's a 10% margin, right? So you make $100,000 per month. A very good restaurant, right? You make $1.2 million a year. Now, a lot of businesses try to cut costs. All right. So let's say that you start to skimp out on the amount of sauce that you put on the pizza. Let's say that you get lower quality pepperoni. So you start using the GMO or whatever, the bad quality pepperoni, right? Instead of the Italian quality. So then you can get your margins up to 20%. Okay. That is what a lot of businesses do. But in the restaurant example I'm giving you right now, their margin will increase, but so will their business, right? So the revenue will drop down. And customers will be like, well, they're skipping out. This restaurant became bad, and the restaurant may drop from $1 million to $600,000 per month, but they make 20% margin. So 20% of $600,000 is $120,000. So see how the incentive is not to have high quality, because with high quality on $1 million you make 100K, right? On 600K you make a 20% profit margin. You have $120,000 of profit. Unfortunately, the business trying to skimp out and use bad quality ingredients, not olive oil. Let's say they use some, cheap seed oil instead of the high quality olive oil, is going to make more money. So, that's the case with the restaurant businesses. But with SoFi in the banking business, you can't really get low quality. I mean, as long as the product does what it says it does and the customer has a good experience, the marginal cost of reproducing this software doesn't cost them anything. That's why software businesses are so powerful, because unlike a pizza business where the high quality of the product itself is so important, and each product has a marginal cost, right? A variable cost, pizza sauce, dough, etc. Whereas SoFi, once they made the banking product, they put a few customer service salespeople in there, and they have some support, and then they have some decision makers on the high end making some decisions, but the profit margin is huge. And when that increases, when the company finds ways to increase it, which is why digitization, however, when you look at a company like a Chipotle, which is why in my private community in Discord, I've been selling put options and making consistent income on Chipotle. It's because they're going to more digital front business. So they're ordering Chipotle bowls and burritos through the mobile app, right? So they got the mobile app, and that's higher revenue, and it's also more predictable, and it's also faster because they can make it ahead of time, reduces the line, and it's a lot of efficiencies and margin expansion. So margin expansion is a really big one. So I'd like to say that SoFi is a really strong business. I already have an option that I'm playing for Monday. I'm bullish on earnings. I think earnings will be very good, and I think it'll surprise some investors, and the stock will go up. Now, My play that I showed you guys here, which you can see on my screen, my play is basically I think SoFi will increase. I don't know if it's gonna go to like $30 per share super soon. So I think that we might see SoFi cross $20 per share. And if it's not this earnings quarter, I think in the next earnings quarter it will. And my shorter term options here are gonna make money off of time decay. SoFi has earnings Monday morning. So I did want to say that if you wanted to see all my plays as I make them live, you could schedule a free demo call and just see if it's a good fit for you, my coaching or my Discord community. There's no obligations, just see if it's a good fit for you. I did have one more segment if you have some time. I know this video is getting long. I did have a couple more segments. I wanted to go over recovery and interest rate impact. I also wanted to go over some risk mitigation and a little bit more about earnings. All right, so apologize if the video is long. Let's talk about the lending segment recovery and interest rate impact. Okay, the lending segment remains SoFi's largest contributor to gross profits, making its recovery critical to the company's overall health. So obviously, lending as the core business is extremely important for SoFi. There is, there is a way like Amazon Web Services that their non-lending segment can continue to grow. It grew at 64%, and that can become like the majority of their business. But having lending grow is extremely important because you have to think about it. Their lending business is their customer front, right? So getting those customers in the door is what again helps them do the upselling, just like the gym upsells on the personal training. The YouTuber has the free webinars that they say is free, but they're maybe selling some high ticket coaching, 5K, 10K or something. Or even on the healthcare side, there's a lot of products on the healthcare side that get you in, and then they upsell you with more. It's across every industry, to be honest. SoFi needs this, just like every other industry needs it. SoFi needs leads. And when a customer comes into the business and they take a lending product, right, they started their relationship with SoFi. Now it's up to SoFi to really develop and build that relationship. And the higher quantity on the front end on the lending segment, the better for the non-lending segment. So you need lending to do non-lending. It's kind of like a catch-22 for SoFi in many ways because they do have some B2B services. So it's not 100% like that, but for the majority, the more customers they have on the front end, the more money they make on the back end. So SoFi has seen a recovery in loan originations, which was previously a concern due to rising interest rates in early 2024. Interest rates are fairly high right now. We see that the 10-year is around 5%, but overall, I don't think it can go that much higher. Like we're not going to see 6% in 2025 at least, right? So as interest rates stabilize, more people are going to jump into SoFi. And actually, all interest rate changes affect the market because people that are afraid of an interest rate hike will, refinance mortgages, stuff like that. So there's a lot of refinancing, and it is a big business. Refinancing is a big business. So look, I want to talk about risk management and risk mitigation. Diversifying across different loan types reduces exposure to any single market. So SoFi is doing good with that because they're not relying on just student loans refinancing. They have multiple exposures in the loan market, which is extremely important, which makes SoFi's lending business more resilient to economic cycles. So, I'm kind of at a loss of words because student loans are kind of criminal. Student loans are freaking criminal. It's so funny how you have like a lot of double standards in a lot of parts of life, right? Student loans, you make an 18-year-old kid, right, sign that they're going to go to college and take out $50K a year. My education was over $250,000. I did get a scholarship. I was a really, really good student, and I went to Central High School where Alex Karp went. I had really good grades, and my parents were really broke. They immigrated to the United States from Eastern Europe. So I guess my hard work, my resilience, I went to college for nothing. I didn't pay nothing. So it really helped me in investing. The reason it actually changed my life because, listen, this is crazy. The whole reason I became a millionaire is because I had internships in college. I had work experience. I shadowed financial advisors, and I saved up money and I invested in the stock market. If I had loans in college, I wouldn't do that because I have loans. I would put all the money to loans and I would have never learned how to invest. It is freaking insane. You can see just from a case scenario me. Had I taken student loans, I may have not even taken the risk to work on Wall Street because obviously Wall Street's a risky job. So if I hadn't had a scholarship, I might not even be freaking multi-millionaire. In my 20s, I was a multi-millionaire. All right, I'm in my 30s now. So it just shows you how crazy it is that they make kids take student loans and the disadvantage it is for getting student loans. It's just a huge disadvantage because finances will really change. Having a lot of money doesn't make you happy. I don't give a crap that I have a lot of money. I don't do these videos because I need more money, and I don't coach because I need more money. I actually find joy in it. I was talking to a dentist yesterday. It was a great conversation. I just love working with people. I love helping people. That's what I like to do. But look, if I had student loans, and I'll keep this short, I wouldn't be taking the risk I took. So I wouldn't be where I'm at today. And you wouldn't have me here on YouTube. I wouldn't even have a YouTube because I wouldn't have invested, because I wouldn't have money to invest, and I would have not had the 11 years of experience in worked at Wall Street had I had student loans. So anyways, the student loans are extremely profitable, right? Companies care about profits. Government cares about profits. So student loans are really profitable, but it's crazy how they screw over students, right? Or people. But when people, which is also crazy when people say, well, coaching is expensive, or purchasing a course is expensive. No, college is expensive. And college, even computer science graduates now have trouble in the job market. There's a huge trend right now about that. These are the reasons why I anticipate a big earnings beat and a full year of profitability outlook for SoFi. SoFi has a good track record of outperforming Wall Street expectations, and its upcoming Q4 2024 earnings report on January 27th is highly anticipated. There's a lot of interest. There's a lot of options demand. I made a video, my last video and a half ago, I think it was on Monday or Tuesday, about SoFi and what I think would be good. So a lot of you guys do have that play, but I just mixed up the play a little bit with a poor man's covered call on top of that for a little bit extra profitability. So SoFi, I think, is on track to achieve full year profitability in 2025, a milestone similar to Tesla's 2020 profitability breakthrough, which historically led to exponential stock growth. So again, I'm comparing SoFi to Tesla. Tesla back in 2020 is kind of where SoFi is at today. They're breaking through, and I expect exponential growth going into the future. So the CEO's incentive, tied, by the way, to the stock to go to $45 per share by mid-2026, is also a very aggressive goal for the company. But again, even if the stock goes to $30 per share, you're gonna get stupid rich. You're gonna get stupid rich. Okay, obviously you're gonna double your money, and if you're using call options, you're gonna way more than double your money. So you want some fast profits, which I think is a very reasonable company that's not a stupid company that's mismanaging. It's SoFi. So if if they continue to execute on their strategy, they beat earnings expectations, maintain profitability momentum, we're obviously going to see all-time highs on the stock. You're going to get some really big growth. I don't know if I'm super early on SoFi. I've been covering it for a long time, but in a 10-year span, this company can 10x, 20x, 30x. It has a really bright future, just like Tesla had and has, just like Nvidia had and has, right? So drop a subscribe on the channel, drop a like. I want to help you guys scale up. I'm going to keep sharing my personal stories here, keep being transparent with what I have, what I'm buying, and doing a lot of research for you guys. If you appreciate that, subscribe. That's all I ask for. And see you guys in the next one.